Hello, good day, ICT traders. This is Divine FX Capital, and today let's dive into the chart. A lot of people get confused on how the trading works. And as an ICT trader, you are trading SMC, you don't know how the trading works. I'm going to briefly break it down to you guys so that you are going to understand that day trading is one of the sweet and most interesting trading as trading range that someone is going to be in, because as a day trader you just need to make a chunk of the market. You just need to make a chunk of the market. So I want to do some analysis. I am a day trader, so I want to use my concept, I want to use my knowledge to teach you guys how to day trade, how to look at the market whenever you wake up, and how to anticipate trade ideas as a day trader, how to look at the market in a particular or in a certain day to frame a trade analysis. So without wasting much of your time, please kindly subscribe to my YouTube channel. This is Divine FX. Help me subscribe to my YouTube channel so that we can grow together as I teach you guys who are my mentees. So let's dive into the chart and let me give you guys a tip and strategy on how I trade as a day trader. So today, this morning, as a day trader, let me go to gold. I'm going to be analyzing gold for you guys. As you can see, I have a markup on gold. I am anticipating as a day trader to take a trade on gold. I have a markup on gold. So let's dive into the let's dive into time frame, because I have some time frames I look up to when trading gold. So this is gold. Let me clear up my chart, guys. So as a day trader, whenever you want to trade gold as a day trader, you just need to go to the weekly time frame. Let's look at the weekly time frame. Let's see what gold is doing. Now, from the weekly time frame on gold, you will see that gold is bearish. Why? Then you will now ask yourself, why is gold bearish? Because whenever you are doing your analysis, you need to be asking yourself questions. You want to know why that thing you are doing is the ultimate. You want to know why and what is the reason behind what you are doing. Now, looking at gold, you can see that the previous week we had were bearish, were bearish week. We have this candle as a bearish candle. We have the second candle as a bearish candle after taking out this high. After sweeping liquidity above this guy, this is what? This is a bearish market. After the liquidity sweep around this guy, this is a liquidity sweep. After the liquidity sweep, price closed inside the range. And the previous candlestick closed below this guy. The previous candle closed below this guy. You see, this is to tell you that gold is bearish. And where is gold going to? Because when an asset is moving in a particular direction, it is going to, the smart money, they don't hide their intentions in the market. The smart money, they never hide their intentions in the market. So it is left for us to understand the candlestick. What is the candlestick telling you? What is the interpretation of the candlestick to understand how the smart money are trying to behave? So that is why when you are anticipating the candlestick, you need to be careful, because when you do any mistake anticipating the candlestick, you are going to be brutally ruined. You are going to start getting your analysis very, very bad. So looking at gold on the weekly time frame, we took out liquidity. Probably it traded into this guy. It traded into this rejection block. Gold traded tapped into this rejection block, then repriced into internal range liquidity, clearing this weekly low. So the weekly low are very, very important. And where is price going to? Price is going to where liquidity is resting, which is this guy. This is our first attraction price. This is our sell side liquidity. You are going to mark it out. Sell side liquidity number one, and also ultimately we have sell side liquidity number two. these are areas price is seeking to trade into. So knowing fully well that the weekly time frame is now bearish and knowing where they are going to, which are this area and also these areas, you now know what price is about to do. Now you will now carry it on your head the way you did the analysis. Clear up what the weekly time frame is. Clear up the markups on the weekly time frame because you don't want to get confused and when going down to the other time frame. Now you know what price is doing. You clear up the markups. Now let's go to the daily time frame. So now on the daily time frame, you will see that price has been ranging for some points and price shifted structure from the daily time frame. We had a shift of market structure shift, MSS. This is a market structure shift from the daily time frame. And from what you can see, you see that we are going to have a power of three concepts: accumulation, manipulation, and distribution. This is just the power of three concepts applying at this area: our accumulation, manipulation, and our distribution. Why is it the power of three concepts? Because knowing fully well that we are bearish on gold shifted structure on the daily time frame, traded into this bullish order block. This is a wide bullish order block. Gold traded into that bullish order block, and what happened? You can see the daily candle trading bearish, trading massively bearish. And where are they going to? These are the areas where they are going to. We have this sell side liquidity. This is our daily sell side liquidity, and also we have this draw on liquidity, which is also that sell side liquidity. Sell side liquidity. So just mark every time frame. Just do your analysis, just do your markups on a day, each time frame differently, because each time frame has their market structure delineation. That is why you need to reanalyze the time frame. You need to reanalyze and clear up every chart drawing you drew on each time frame differently. So this is my anticipation on gold because they are bearish. You can see the candlestick closing below each other, trying to take out this what? Liquidity. So knowing fully well that gold is bearish, now let's go to the 4 hour time frame. The 4 hour time frame is now our big boy time frame. Now on the 4 hour time frame, we are going to be looking at structure. On the 4 hour time frame, we are going to be looking at what? We are going to be looking at structure. And if you see that this liquidity area is very close for price to trade into. Now we can see that price shifted structure here. We shifted structure here. Market structure shift. I mean, we broke structure around that area. This is a break of structure. And what happened? Price left us with an imbalance. We have this imbalance. Price left us with an imbalance untraded. So currently, price swept liquidity below here. We swept liquidity. This is what? Liquidity. And price broke structure again. This is the time frame for structure. We had our break of structure. This is our break of structure, BOS. This is our break of structure. Now we have our dealing range. This is our dealing range, our range high and our range low. This is the range we are going to be paying attention to because overall we are bearish. So we want to see price trade into premium before we continue the sell movement. So from the 1 hour time frame, I saw something earlier today on the 1 hour time frame. So on the 1 hour time frame, the dealing range was very clear for us to see. Price is still dilly-dallying on the discount area, and you cannot start taking trade on our discount area. That is why you are going to wait for price and align to the bearish movement, knowing fully well that the weekly time frame, the daily time frame is bearish, and the 1 hour and the 4 hour time frame is giving us a shift, a continuation pattern to the bearish direction. So you just need to be patient to trade to the direction of the smart money. So this is our premium and discount area. This is our premium. premium, premium and discount. This is our premium and discount area. So we want to see price trade into premium. Now, looking at the premium area of price, what do we have there? Look very, very carefully and know what institutional reference point do we have here. Is it a mitigation block? Is it a fair value gap? Is it a breaker block, or is it a liquidity void? And looking at this guy, you will see that we have a liquidity void. This is a liquidity void. And looking carefully, we have an imbalance, sell side imbalance, buy side inefficiency, which is this fair value gap. So we have this fair value gap because it is resting at the discount area, and also we have a bearish order block. This is our bearish order block. So now we want to see price come into that premium area. This our point of interest. We want to see price trade into our point of interest before we go what? Before we go bearish. So this is how to anticipate and look at the market to frame a daily bias as what? As a day trader. Now your job now is to be patient, to wait for price to trade into this guy. Some people will be expecting to see price trade into this area. Some people will be expecting price to trade into this guy because that area is not traded into before we trade bearish. But the reason why price is going to use this guy, the reason why price is going to use this area, this dealing range, is because this liquidity is clear. This liquidity is already this liquidity is already closed. Price tends to seek liquidity before reversal. Because this liquidity is closed, because this liquidity is closed, price is not going to start turning up to go to this area because this is very far from price. This is very far away from price. So price will not seek to trade back into this guy because it is very far. Coupled with the fact that we are bearish. Coupled with the fact that we are bearish and this liquidity is closed. So price we seek to trade into this guy, then tap into this liquidity before doing any other thing. So our job now is to what? Our job now is to wait for price to trade into this guy before we start selling. That is the reason why if you go to the 15 minutes time frame, the 15 minutes time frame is already buying. What can you see? We have a break of structure from the 15 minutes time frame. We have a market structure shift. We have break of structure. Price is breaking structure above. You can see break of structure. This break of structure is happening because price is trying to trade into this our point of interest from the 1 hour time frame. That is the reason why this break of structure, price came back to this fair value gap and started buying. I saw this trade earlier, but it has already moved. I cannot take the trade because it has already moved. So it was at the early hour of the Asian session, so I didn't take the trade. So the reason why this asset is buying so that it is going to fill up this guy. And the moment price trade into our point of interest, I'm anticipating to see, it's not anticipating, I'm expecting to see a shift of market structure to trade this guy bearish. So the moment I see this shift of market structure, I'm going to be trading this guy bearish to this area on the daily time frame. So this is how to look at gold as a day trader. Because on the 4 hour time frame, we also have a fair value gap. So these areas are, because of the fair value gaps, I know that those guys are going to be powerful. You see this fair value gap, we have it is also a balanced price range. You see this fair value gap by the left. We also have a balanced price range. Fair value gap by the left, fair value gap by the right. So we have a balanced price range around this area. So making price a very, very important area for price. So we want to see price give us that 15-minute shift of market structure. The moment we have that 15-minute shift of market structure around this area, then we are going to be targeting this imbalance, balanced price range, and also this sell side liquidity. So this is how we look at the market as a day trader to frame a trade analysis. And please, if you find this If you find this topic interesting, please kindly subscribe to my YouTube channel and turn on the notification button to get more important important videos. So thank you for watching, guys. Kindly subscribe to my YouTube channel. Subscribe, subscribe, and subscribe.